Hello there. Welcome to lecture 10 of the day trading model. This lecture is about the process. Before we begin with this lecture, I must first give you a risk disclaimer. TOTK is an exclusive educational platform, meaning all of the content that gets shared on this platform is meant for educational and/or entertainment purposes only. This risk disclaimer gets shared prior to any lecture, and therefore it is very important to accept this and understand this. When signing up to the mentorship or TOTK, you have already signed the terms that state that you accept this risk disclaimer and our terms of service. However, it is important for us to keep on sharing this disclaimer because when it comes to what we're doing, risk disclaimers are crucial to have. So let us take a look at the table of contents for this lecture. This lecture we're going to take a look at a flowchart. You might be wondering, flowchart? What kind of flowchart? Well, this lecture is all about the process and defining the process. And the way that we will define the process is by looking at the flowchart. Secondly, I'm going to showcase the model. However, I'm not going to showcase the model randomly, or I'm not going to showcase it without any structure. I'm going to give you a flowchart and I'm going to apply that flowchart to trades that I've taken way in the past to show you that I've been utilizing this knowledge for a very long time already. Because it isn't like, oh, he taught it and now it's just since 1 month it works, or since 2 months it works, or since 3 months it works. No, this has been going on for a very long time. And that's what I'm going to showcase to you during this lecture. So let us take a look at the beginning of the flowchart. For this flowchart, there are 3 crucial steps to understand. First of all, we're going to take a look at environment selection always. Within the model series, there has been a complete lecture about environment selection. I would highly suggest you to watch that. Secondly, we're going to take a look at environment recognition, meaning once we have determined the environment that we are looking for specific things to occur in, we're going to look inside of this environment for other specific things to occur in to confirm whether or not the environment that we have chosen in the first place is highly probable. And after we've established that, we will move on to the model. The model being basically our program. Do this, do that. If this happens, don't do that, etc. For environment selection, please refer to the lecture about the topic inside of the model series. Here we are on the representation of the whole sequence of events for the environment recognition. As outlined, we always begin with environment selection. For this, please refer to model series lecture 6. After we have deemed that the environment is highly probable, we move on to the next part of the sequence, which is environment recognition. First of all, we take a look at higher time frame drawn liquidity. If this higher time frame drawn liquidity has not been hit, we move on. However, if it has been hit, we walk away. X representing a reset of the whole sequence of events, meaning we begin all the way back at environment selection. If the drawn liquidity has not been hit, we move on to intermarket relationship. For intermarket relationship, there are multiple things that we will be looking at. First of all, the main thing of concern is the following. Are the markets moving in sync? Meaning, are the markets of interest in sync with their respective, between brackets, inversely correlated markets? If they aren't, we walk away and the whole sequence repeats itself. If they are moving in sync, we move on to the following. Is there SMT on both sides of the marketplace? If there is, we walk away. We reset the whole sequence and we go back to environment selection. If there's no SMT on both sides of the marketplace, we take a look at the final key steps, which are during macros, our specific time windows, price should deliver in a certain way. Meaning, during the windows that have been provided to you, XX45 to XX15, we want to see price reverse or expand during these windows. We want to see volatility get injected during those windows. If the market consolidates during our macros, it's a crucial warning sign of the delivery may be being very choppy or a whole consolidation environment being present. Let us now take a look at the next part of this sequence, which is the model, which will eventually be one of the most important things when it comes to price patterns and spotting price patterns, because the model is all about executing ideas, but only on demo accounts, of course. Here we are at the model part. As you can see, we have gone through the environment selection. We have established that an environment is likely to be high probable. We take a look at environment recognition, meaning during that day where we're expecting a high probability session to form, we begin to look for specific signs to confirm this. After that, we move on to the model part. And the model can be showcased to the following. First of all, we need to know the high time frame strong liquidity. This has also been established within the environment recognition, but I thought it would be very important to share this as well within the model part, because within no high time frame structure, there's a big chance that you're going to get lost inside of the price action. So you need to have that high time frame strong liquidity. When you have that high time frame strong liquidity, the next step is to take a look at your time of interest. During what time windows do you want to see specific things occur? During what time window, during what time of interest, do you want to see your point of interest get reached? Meaning, for example, your high time frame PD array or any other point of interest that you've been learning here inside of my mentorship. Once this point of interest has been reached, we move on to the next part, which is SMT. We look for SMT with a highly inversely correlated market, inversely being of course between brackets. After the SMT has been established, we move on to displacement. Displacement being, of course, the creation of a breaker. That breaker formation with an imbalance signals to us that there's speed and velocity behind the reversal. Note, a imbalance is not required to form inside that breaker formation. An order block is also enough, or a retest of the breaker. We then want to see a retracement into that bullish breaker. That's our first entry opportunity. If we miss that entry opportunity, we of course wait for displacement higher again and we enter in a later market maker model phase. That is, however, not important for this flow chart, because for this flow chart, all it is the following. We wait for displacement, wait for retracement, buy or sell. After we have entered our position, we move on to management, meaning trade management. How do I manage the position? When do I trim my stops? Where do I take profits? All of those things are very important variables. And yes, I will teach them within this mentorship how you could effectively manage positions. After the management part is done, we move on to the result part. The result part stands basically directly correlated with the whole model, meaning the result is a result of your ability to recognize the environment, your ability to wait for your model to present itself within that environment that you've recognized and deemed as highly probable, and then being able to utilize your model. When the result is present, we move on to the environment selection. again. And then the whole cycle repeats itself. The whole sequence repeats itself. And that right there showcases to you that there's no end to this. It's infinite. Of course, there are things that you need to do after the result has presented itself, meaning journaling, logging, all of that stuff. But technically speaking, after the result, the whole sequence of events resets and you move back to step one, which was environment selection. You're probably like, whoa, this is a lot. Trust me, when I go into the charts and I will apply this logic right here, it will become easier for you to understand it. So let us do that. Let us take a look at real chart examples and real executions taken by me to break down to you why I did what I did. In order to break down this trade, we're first going to take a look at the economic calendar. As you can see, at 10 a.m. on Friday, we had high impact news for the dollar. If we then take a look at the hourly chart, we can see the following. We can see that during the beginning of the morning session, the market began expanding higher. It overran this CB and it overran this down close candle. Back in TFTK, I used to do week reviews in the same format as I'm doing now. And I shared with them that I was looking at a very specific down close candle of this price range right here. The market displaced above that and then utilized that down close candle as support. When I saw that, I knew price was likely to expand higher towards previous day high and even higher. What we can see now is the following. We have a high impact news driver during the morning session. We have market structure supporting the idea of higher prices likely to be next because bearish arrays are being violated. So therefore, we can anticipate expansion to the upside to occur. When we then take a look at the lower time frames, we can see that ES created lower lows right here, whilst Nasdaq created higher lows. That right there is SMT. Nasdaq never displaced below the 9:30 opening price. That's not a form of SMT when ES did. Market forms a low here, and it then begins to expand higher into the buy side liquidity here, and eventually into this buy side liquidity above the equal highs that get engineered during this shallow retracement. When we then zoom in, we can see the following. We can see that between 9:30 to 10:30, the market expands right here. During 9:30 opening, it repriced lower. This is manipulation. Market expands higher, goes sideways here, runs to the upside, then displaces lower, news drops price lower again. What does everyone think? Well, the news sent price lower, so therefore we must anticipate lower prices. We of course know that the opposite is true. Market trades into that 9:30 opening price, consolidates here for a while, goes sideways. A low forms, SMT is present, and then the market displaces to the upside. It retraces into this upclose candle right here, which is a bullish breaker. You have a low right here, high, lower low, displacement through that high. We anticipate that high to function as support on price now. Notice in what that high formed. Inside of the CB, boom, long, when, during 10:45 to 11:15. Reversal was in before 10:45. That's not a problem. Why? Because 10:45 to 11:15 can also function as an expansion macro, where we anticipate price to retrace and then expand higher. Do you notice how I'm going through basically all of these steps within the protocol in a structured manner? Environment selection, environment recognition, order flow, higher time frame draw liquidity, time of interest, point of interest, SMT, displacement, entry, management. It might seem like a lot for you right now, but in due time, this will all begin to make sense to you. And when it does, you will get to a level of understanding that's insane. Let us take a look at the flowchart before we continue to the next trade breakdown. First of all, we're going to take a look at the environment selection, determining whether or not an environment is likely to be highly probable. Then, when we're in the environment, when we're in the moment, we take a look at environment recognition. We look for the signs to confirm to us that the environment is in fact high probable or not. If the environment is deemed as highly probable, we go on to the model. The model then states that we need to have a clear higher time frame draw on liquidity. If we have that established, we move into the time of interest. The time of interest is our time window in which we're looking for very specific signatures in algorithmic price delivery to determine whether or not our setups are going to form. When our point of interest gets reached during our time of interest, alarm bells go off and we begin to look for signs to confirm an SMR. We then look for SMT inside of our point of interest. And if SMT is present, we anticipate displacement to occur. And once displacement occurs, we wait for a retracement and we can go into our positions on our demo accounts during this retracement. This is our entry. When the trade then is running, we look to manage this position as best as possible. Once the management is completed, when price reaches our target or reaches our stop loss, we then wait and manage the result, we log it, and we then go back to environment selection. This is just a simple repetition of what has already been explained, but it's important to keep on repeating this flowchart right here just to make you understand it, and then we can go into our chart breakdowns to make it more clear to you. next trade we're going to break down was from the 4th of October 2023. As you can see, this was an NFP week and it was high impact news during the morning session. The trade was taken during the afternoon session. As you can see, during the morning session, the market expanded higher after finding, so to say, support inside this BC. After respecting this BC here, the market expanded higher, closing above this CB right here. Notice that the market then retraced, but it left equal highs right here. This by itself is of course something to be aware of when we're looking at the PM session. Such equal highs like to get tagged. So what we see is that the market retraces and then continues higher during the afternoon session. If we zoom in, we can see the following. We can see that during lunch, the market consolidated and went sideways. Then during the second PM cycle, starting at 1 PM, the market expanded lower. It retraced lower into these discount BCs right here from the morning session. Whenever you see a market consolidate like this and then retrace into discount BCs, but not violate them, you already know with a high degree of probability that they're engineering more buy-side liquidity to be attacked at a later point in time. Then between 1:30 to 2:30 PM, the market reaches those discount BCs. Fractal market maker model SMR signs become present. Market displaces to the upside, went long inside of this candle, and I then rode it up higher into this buy-side liquidity right here. Notice that every single imbalance that formed after the smart money reversal here acted as support on price. If we zoom into the lower time frame, we can see the following. We can see that the market consolidated during the first PM cycle. During the second PM cycle, the market runs lower, manipulates lower. We take out the previous cycle's low, which is this low right here. You can't see where the low was, but it was at this price level. Market is trading below that. And towards the end of the second PM cycle, after 2 PM, the market runs lower, taking out these relatively equal lows with this big down close candle, and it then immediately reprices through this CB right here. That shows that the order flow is changing from sell program to buy program. A BC gets formed, market retraces into that BC, market trades below the 230 opening price, meaning price is in a discount relative to the current 90-minute cycle, and there a low forms and the market continues higher. Every single discount array that forms after market trades away from this BC is functioning as support on price. Change in the state of delivery took place the moment the price displaced above this high right here. Why? Because this high set up the run below this sell-side liquidity here, trading into a point of interest during a time of interest. During what time of interest, you might be wondering? 1:30 to 2:30 PM. Low forms and smart money reversal signs become present. Notice that between our macro window, the market begins to expand higher aggressively. 2:45 to 3:15 PM, market trades into that 5-minute imbalance, displaces above this CB on the left side of the curve, function as an inversion value gap, boom, there it goes. Target delivered during our macro window. Beautiful delivery and beautiful market maker buy model. However, there was one thing that wasn't as beautiful, and that was the following. There was no SMT present with, for example, Dow Jones or ES on the lows. So you might be wondering, was this trade still valid then? Was this still a valid setup? Well, let us take a look at what the door Dixie did during this afternoon session on the 4th of October 2023. As you can see, on the left side of this chart, we can see Nasdaq, and on the right side, we can see the DOR index. Nasdaq created a lower low, whilst DOR created a lower high. This should of course not have happened, since these markets should do the exact opposite of one another if they're in sync. Due to this cracking correlation, we can define this as an SMT between Nasdaq and the DOR. And this was what set up that run higher on the index futures and the run lower on dollar. Next trade that we're going to break down is a trade that I took on the 23rd of February 2024. As you can see on the economic calendar, there was no high impact news for this day. This by itself is not a bad thing because it was a Friday. It was obvious where the market was drawn towards. Here we are on the hourly chart, and what we can see is that on Friday the market ran up higher until the morning session, and the market took out this high right here. This was the old all-time high for Nasdaq, and because we were bullish the whole week, I was anticipating the market to retrace into the weekly range. Why would this occur? Because this was a thank God it's Friday scenario, where the weekly expansion was to the upside, so we can anticipate Friday to form the high of the week and to close lower. My drawn liquidity was the London sell-side liquidity. Here we're on the 15-minute chart, and we can see this beautiful repricing higher. Nothing but bullishness inside of this leg higher. Of course, there are a few down close candles, but the up close candles outweigh the down close candles significantly. Then we see this big rejection of that price level right here. If we take a look at the lower time frames in a bit, you will see beautiful time-based delivery, market reverses and offers sell side just as quickly as it delivered buy side higher. Here we're on the 1 minute time frame, and what we can see is the following. We can see that from 9:30 on, the market repriced higher. Above that, buys the liquidity of that old all-time high, and the market goes sideways for a bit. Inside of that expansion higher, a BC formed. At 9:37, Nasdaq formed its respective high. At 9:45, this high was created and the market began a sell program. It displaced below this BC, and we then saw that a sell program was initiated. What confirms the sell program, you might be wondering? Well, the sell program got confirmed by an SMT with ES on the highs right here, a cracking correlation. ES made a higher high, whilst Nasdaq created a lower high. Market displaces lower and it retraces into that old BC, into that old inversion value gap, into that old high right here. If you want to see the full breakdown, please go to the trade breakdown of this trade on the mentorship platform, and the market expands away. Notice that this is all occurring during our time window, meaning if you go short right here and you see this displacement lower, price should never displace above that CB anymore if it's going to continue to draw lower. Notice as well how we're making use of the 90-minute cycles to determine a partial objective. For example, this sales liquidity right here is a good objective. Market trades into that CB and it slowly expands lower. Every single premium array is acting as resistance from price. Again, notice how I'm making use of the framework within the flowchart described within this breakdown. It's this step, point of interest, reached during our time of interest. What's our time of interest during the morning session? You already know that answer. Time of interest for the morning session is 9:30 to 10:30, the full hour, and our focus is specifically on 9:45 to 10:15. As you can see, the smart money reversal comes in before that 30-minute interval. However, what begins at that 30-minute interval? A sell program. That right there is a sign of time and price aligning. We were expecting a smart money reversal to form, and we're seeing the confirmations within our flowchart, within our sequence of events confirming this. I have a homework assignment for you, and it's the following. I want you to go into your own charts and begin to look at market maker model delivery through the lens of a flowchart. Use the flowchart provided as an example, but eventually create your own. This will be your own protocol. Please do not copy and paste everything that I outlined during this lecture. It's important that you add your own variables. It's important that you add variables that are based on your personality, based on you as a trader. And of course, every single step outlined within this flowchart can be taken to a next level with more steps to it. Try to find at least 20 plus market maker model examples and apply a flowchart logic to it. The platform utilized to create the flowchart showcased in this video is Miro. It's free and it's a great tool to utilize for creating flowcharts in my opinion. With that, this lecture comes to an end. This lecture was, in my opinion, a very important lecture to make because with all the information that I share, it's very easy as a new student to get lost in that. I can imagine that it's hard to comprehend the amount of steps that there are to the model that I'm teaching you. However, trust me, in due time, things will begin to click and it will be easier for you to understand. And then such a flowchart will just be ingrained in your mind and you'll just be able to wake up at the middle of the night by, for example, me or an army instructor, whatever, and you can immediately say, this is my model, this is my protocol, this is my sequence of events that I need to see in order to take a trade. When you're at that level, you have arrived. You have arrived. And no one can take that away from you ever again. And it's a level of confidence that I truly hope that you will all experience one day. I hope that this lecture has given you great insight on how I apply a flowchart to my own trading. And I think that we should continue applying this flowchart during the next lecture. And maybe add some rules here and there when it comes to psychology. Because psychology can be quite tricky in trading. In fact, this game is won in your mind. It's a psychological warfare with yourself. And these markets are programmed to make you basically fuck up yourself. So we need to learn how to control ourselves and how to manage ourselves to get the outcomes that we so badly desire. And I will apply the same flowchart showcased within this lecture, and I'm going to add psychological rules to that we must adhere to at all times. Good luck studying, and I look forward to speaking with you in the next one.